Hi there and welcome to the weekly roundup for week ending the 24th of July. The start of this week was on a brighter note after EU leaders agreed to the EU Recovery Fund. Now this is a fiscal stimulus package to cushion the blow of the coronavirus crisis. So that optimism set stocks off on the front foot. However, since then, concerns over rising US-Chinese tensions have dragged on sentiment, as have rising coronavirus cases in the US and concerns that that's now starting to impact the economic recovery there. The FTSE is looking to end the week down around 2.8%, the DAX around down 0.6%, whilst the US indices are also looking to end the week in negative territory. Star performer this week has been the euro, obviously with this promise of the agreement for the fiscal stimulus. The euro has soared. Also, we've seen that Eurozone data has been particularly upbeat. German consumer confidence has really jumped, as have the PMI releases from today, show that there's the service sector and the manufacturing sector are strongly in expansionary territory. On the back of that, the US dollar weakness has also been a big story this week. The dollar index, so the dollar versus the basket of currencies, is trading down at sort of 4-month lows. Now, this is partly to do with the popularity of the euro and the fact that sort of the euro appears to be handling this coronavirus crisis in a better way than the US right now. So on the back of a weaker dollar and some other factors, gold has been another star performer, up just shy of 5% this week. It's it's trading around or hit highs of just shy of $1,900. Now this is basically, as I said, on the back of a weaker dollar. You've also got safe haven flows because of this US-Chinese tension, and also the prospect of further stimulus, fiscal stimulus from the US government is boosting demand for gold, which is also an inflation hedge. On the back of strong gold prices, stocks in the UK, Polymetal International has soared 11%. That gold miner is on fire, not only on the back of the gold prices, but it also reported this week and said that it had a strong outlook for Q2, expected prices to remain high and sales volumes to remain elevated. As far as other UK stocks which have outperformed this week, Unilever surged. It's up around 6.5% across this week, and that's added to gains of around 4% last week. So the stock's looking at 10% gains over 2 weeks. Now, Unilever reported this week, and the results were indeed better than expected. It's sort of hygiene products and food retail sort of soaring has overshadowed or has offset the out-of-home dining sector, which is really just ground to a halt at the moment. So as far as US stocks are concerned, we've had US stocks have been really in focus. We've got earnings season over there. It's been tech stocks which have been particularly under the spotlight. So Tesla reported better than expected earnings. They reported a profit, the 4th straight quarter of profits, which means, importantly, that it now qualifies for inclusion in the S&P. Now, this is really important because it means that funds that perhaps previously wouldn't have been able to buy into Tesla are now actually allowed to. And also the other one that's been a big mover this week is Apple. Now, Apple overnight, on the Wall Street session yesterday, it dropped 4.5%. And this is basically on the back of a report from Goldman Sachs, who have warned investors to be cautious of Apple at these levels. And they've warned over sort of the outlook for Apple in the near term. And there are also concerns that Apple will push back on the release of the next iPhone. So that's also dragging on Apple. Now, the Nasdaq has been a big faller, particularly on the back of the declines from Apple. Thanks very much for joining me, and have a good weekend.